Welcome. Today we're diving into Section 73 of the GST Act, a crucial part of India's tax compliance framework. This section specifically deals with non-fraud cases related to GST, meaning situations where mistakes happen but there's no intent to deceive. Understanding Section 73 is essential for businesses and professionals alike, as it outlines what happens when GST is not paid, short paid, or wrongly claimed, but without fraudulent intent. We'll break down the process, penalties, and practical implications, making it easy to grasp even if you're new to GST compliance. Let's start by understanding when Section 73 applies and why it matters for every taxpayer. Section 73 comes into play when a taxpayer fails to pay the correct amount of GST on their taxable supplies. This could mean GST is not paid at all, or it's short paid, meaning less than what's actually due. Such discrepancies impact government revenue and can trigger compliance checks. The section is designed to address these issues in a structured way, ensuring that businesses have a chance to rectify errors without facing the harshest penalties reserved for fraud. Recognizing these scenarios early helps businesses avoid bigger problems down the line and maintain a healthy relationship with tax authorities. Process under Section 73 typically starts with the detection of noncompliance. This can happen through audits, assessments, or even voluntary disclosures by taxpayers themselves. Once a discrepancy is identified, authorities issue a formal notice to the taxpayer. This notice details the findings and provides a specific timeframe for the taxpayer to respond, clarify, or rectify the issue. It's a transparent process that gives businesses an opportunity to explain or correct their filings before any penalties are imposed. Timely response to such notices is crucial for minimizing financial and reputational risks. After receiving a notice under Section 73, taxpayers are provided with several options to settle outstanding dues. These options include making payments online through designated gateways or opting for installment plans if the amount is substantial. This flexibility is designed to ease the financial burden on businesses while ensuring compliance. By offering multiple payment methods, the authorities encourage timely resolution of dues and help businesses avoid further penalties or interest. Understanding these options can make the process less daunting and more manageable for taxpayers facing Section 73 notices. One of the most important aspects of Section 73 is understanding the penalties and interest that may apply. If GST is not paid or is short paid, financial repercussions follow. However, since these are non-fraud cases, the penalties are generally lower compared to fraud cases. Interest is calculated on the outstanding amount, and a penalty of up to 15% can be imposed. This structure emphasizes the importance of timely compliance and encourages businesses to rectify mistakes quickly to avoid accumulating interest and penalties. Section 73 is divided into several subsections, each addressing a specific scenario. Subsection 1 deals with cases where GST is not paid but no fraud is involved, allowing taxpayers to rectify the situation without severe penalties. Subsection 2 focuses on short payments, guiding taxpayers on how to amend their filings and pay the due amount. Subsection 3 addresses excess refund claims, ensuring that overclaimed amounts are recovered and fair taxation practices are upheld. These subsections provide a clear roadmap for compliance and correction. Put things into perspective, let's look at a typical penalty rate under Section 73. In non-fraud cases, a penalty of up to 15% can be levied on the amount of tax not paid, short paid, or wrongly claimed. This is significantly lower than penalties for fraudulent cases, reflecting the intent to encourage voluntary compliance and timely correction. By understanding the penalty structure, businesses can better assess their risks and take proactive steps to avoid unnecessary financial strain. It's important to distinguish between Section 73 and Section 74. While Section 73 handles non-fraud cases where errors are genuine and not intentional, Section 74 deals with fraud or willful misrepresentation. The penalties and interest under Section 74 are much higher, reflecting the seriousness of fraudulent activity. Understanding this distinction helps businesses recognize the gravity of their compliance obligations and the benefits of timely, honest reporting under Section 73. Practice: Section 73 notices are commonly triggered by late GST payments, short payments, excess refund claims, or irregularities in input tax credit etc. To avoid these, businesses must ensure accurate reporting and timely payment of taxes. Noncompliance can lead to significant financial penalties and disrupt cash flow. Chartered accountants play a vital advisory role, helping businesses navigate complex regulations and minimize exposure to liability. Ultimately, diligent tax management and a proactive approach to compliance are key to avoiding Section 73 pitfalls and maintaining business health. Sum up: Section 73 of the GST Act provides a clear framework for addressing non-fraudulent GST discrepancies. It emphasizes timely correction, reasonable penalties, and the importance of compliance. By understanding the process, from detection and notice to payment options and penalties, businesses can better manage their tax obligations and avoid unnecessary financial risks. Staying informed and proactive is the best way to ensure smooth operations and maintain a positive relationship with tax authorities.